Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on August 9th. So it's been obviously a very volatile week and really 2 or 3 weeks out there. What had, the background is we had a spring correction. We came out of it, looked fine, but then June and July became very, very narrow. And not just narrow like focusing on growth stocks, but narrow focusing on like 10 stocks in the entire market, okay? We had a convulsion there with the broad market doing well for a week or two, but overall we kind of spilled into a correction that obviously accelerated last Thursday, Friday, and then this Monday when things, the VIX spiked to 50 and all that stuff. The good news is we have seen, a pretty nice bounce, especially among individual stocks this week, which I'll get into. The major indexes, we'll see. Overall, my view is fairly straightforward. Like near term, and I need to come up with a better analogy than this, but near term, this is like falling off a motorcycle, going 50 miles an hour. The market probably needs time to heal the damage, for a few weeks, some ups, some downs, some news-driven moves, that sort of thing. We've seen this a lot in the past, okay? So that, right now we're still pretty cautious. We're about 60% cash in Cabot Growth Investors model portfolio. Longer term, I do see some abnormal action. I'll show you a couple examples. In some stocks that have gone up, 700% in the past year, they look like they may have topped out. Not that they can't bounce, but that they've probably topped out. And certainly things like chip stocks that have had huge runs might need, again, more time to heal the damage. That said, I'm really not seeing that much big picture abnormal action among major indexes or growth measures or a lot of growth stocks, which frankly, this week I've actually seen more positive action and some, big shakeouts on Monday, but then they've come back, a lot of positive earnings reactions. I'm not saying it's 1999, obviously, but under the surface, I'm actually seeing a little bit more to be encouraged about now than I was a couple weeks ago, which seems like it would be a little bit backwards, but that's just what I'm seeing among individual stocks. So right now, we're still cautious. Good stocks can go bad in a hurry in a bad market. And if we do have another leg down, which we could, if we do chop around for a while, some of these things, there could just be vicious rotation or some things could fail. Right now, I just think it's more about patience for now, okay? But overall, let's just see how it goes. The odds favor, maybe we have a V bottom and go straight up. Maybe this is the start of a massive decline, new bear market. But when you're looking at the odds favor, to me, the odds still strongly favor. This is a correction that we have to work through, but it is going to launch a sustained advance down the road. So now it's just about keeping your actual capital, your money, but also your mental capital sort of safe, mostly on the sideline as we monitor sort of what can be leaders of the next advance. Okay, let's hop into the charts. As usual, I'm using a product called Market Surge, product of Investors Business Daily. You can learn more at marketsurge.com. Get up my line pen. So the NASDAQ is obviously kind of the leader on the down. It was a leader on the upside. It's kind of the leader on the downside, so to speak. And, to me, when you had a prolonged advance, obviously over the past, I guess the couple years, if you want to go back to 2022, but even since just last Halloween, call it, and then you fall, I think on a closing basis, it was like 13, 14% in just 18 trading days. And you can see so far the bounce, it's good. If we didn't bounce, that would be bad. But so far, it's really, it's not even back to where it was last Friday as I record this, okay? And we're still miles below the 50-day line and the 25-day line and stuff like that. It did find support at the 200-day, which is kind of another, it's sort of doing what you should, so to speak. It's a logical place for it to find support when it's oversold and, panic is in the air like it was on Monday. But, big picture, I can't say this is like the end of the bull market. But near term, I also think, yes, we could easily trek higher here. But doing this, it's possible. I'm not saying it's, a 1% chance. Maybe it's a 25% chance. But, there's probably 3 to 4 to 1 odds that we're going to have to hack around, retest the low, or something like that here going forward, okay? Like I said, the other indexes aren't quite as bad, but similar. The S&P 500, not as big a decline. But again, it's just kind of wedging higher here, still below the moving averages. So, I'm all for it. We come here, I'm doing the video in a week or two, and the S&P's up here, and growth stocks are ripping higher, and there's breakouts everywhere. Like, I am there. But right now, just looking at the evidence, my guess is it needs time. To be fair, the broader indexes, as we just run through them, they're more neutral than negative. It's more just that the breakout failed. This is IWM, had a great breakout, held up well, looked like it was getting going. It was last Wednesday, basically. I think it was the Fed day. Looked like it was breaking out on the upside and then obviously collapsed. Same sort of thing with mid caps, the New York Composite, same sort of thing. Not good. They all kind of found support at or above. You can see this in the New York Composite above the 200-day line. So you can call these more neutral than negative. But overall, I would just say There's really not much out there that's positive per se, okay? Just running through some other things. So we are seeing, I wouldn't say a rush of buying, but certainly we've seen relative strength here. This is the XLP. You can see holding very firm right near its highs. This would be a sign too, like say we do bounce here next week. This is a time to really watch this. Say the NASDAQ is up, you know, whatever, 0.75% on Monday and it's 0.5% on Tuesday. If the XLP is kind of fading or sitting there, that's probably a little bit better than if the XLP is up 1.5% when the NASDAQ's up 0.75. You know what I'm saying? Like it just sort of depends on what's working. So far, it's not super strong, but there's certainly been, you know, a little bit of a rush. Utilities had a nice, you know, holding up pretty well. XLV, which is sort of more defensive, and big cap healthcare, you know what I mean? Sitting here almost near closing highs. So there's definitely been a little bit of a relative strength, a little bit of a move into defensive stocks, obviously a move out of risk on stocks, and we're in a correction. I mean, I'm not telling you anything you don't know, okay? The other thing I would just say is, again, I don't want to get too far into this because I'm pretty much like, let's take it as it comes. Maybe chip stocks have bottomed and they have another 200% move here within the next year. Like, I'm all for it. But, you know, having broken out, this is just the chip fund, so SMH. The original breakout here was really last year around 130, in my opinion. And so this, you know, it more than doubled as an index. And now you've kind of had this, I forget, I should have done this math. I wrote it out, but it went from 280 to 200. So it's 40, you know, that's, or I'm sorry, 80 on 30, you know, so it's like 25% drop in less than, like it was about 3.5 weeks after a huge sustained move where all the stocks are popular and it's NVIDIA and all this. My guess is it's just going to take time to repair the damage. And sure enough, that really hasn't, compared to some of the other indexes and areas, it hasn't bounced as well. And we have seen some, so to me, like this is Dell, right? This is a perfect example to me. The stock, this is the bear market, and then it's had a huge run from, you know, just say whatever, 40 or 45 up to 180, so it quadrupled. Had a climax top here, and now the stock has fallen 50% from its highs in whatever, a couple of months. To me, this stock is top. Now, I'm not saying the stock can't rip back and have a very good trade over a few weeks or something like that. I really don't follow it that closely. But I'm just saying, you look at this sort of action, huge run, extended, blow off top, down 50% from its high, probably toast. You know, this is Vertiv Holdings. This one isn't as bad. But again, it's just, you know, it broke out here at 18. It got up to 110 over the course of, say, 15 months or so without any real pullbacks. And now it's, you know, right now it's down 35% from its high. It was probably down a little over 40 at the lows. Maybe it comes back. Again, I'm not saying these things can't bounce 10, 20, 30%, but I'm just saying as a big picture statement, there is some abnormal action like that in some of the huge winners. But it's still, the reason I'm bringing this up though is it's not widespread. Like it's not like when I look at, say, NVIDIA, which obviously is kind of the number one stock, do I think this needs time to heal? Yes. Do I think this is looks like some major top with major volume? Not at this point. Maybe it is, maybe it isn't, but it certainly looks sort of more like a normal correction. The stock probably needs some time to heal the damage, like we've said 100 times already, okay? So that's all. So at longer term, I'm still viewing this as a correction that we're going to come out of. And it's just a matter of, like I said, keeping your money safe and also keeping your eyes open so that we hopefully get some real fresh leadership as things you know, broaden out. Now into individual stocks, the good news is I've seen, like I said, a lot of earnings reactions that have been positive this week, and some that have, you know, some stocks went right down. It's like you cross them off your watch list because of Monday, and then you check back on Thursday and you're like, wow, this thing's right back on big volume on earnings or some other, maybe just on regular buying, okay? So just like flipping through, other names have been correcting for a while. They didn't just top out a month ago. And so there's, you know, fewer weak hands in there. So this is ServiceNow, emerging blue chip type name in the cloud software space. Okay, and it topped out in February. So it's already kind of had a pretty big correction, shook out below the 40-week line. Now it tried to break out on earnings, whatever this was, 2 or 3 weeks ago. And that didn't work, obviously, with the market. And it's been hacking around. You can see on a daily basis, it's 30, 40, 50-point range. But overall, the stock is holding up pretty well. It's a couple days from, you know, a couple of good days from new all-time highs. So, you know, those are the type of names you want to look at. It certainly looks like it wants to go higher if the market can really heal itself, okay? Some newer names, this one popped up in top 10 this week. This is Clearwater Analytics, CWAN. It is a little smaller and thinner. You can see it's a new issue here back in 2021. Was dead as a doornail for a while, but this is like a nice big consolidation here, and then it did break out on earnings last week. It is down this week, but big picture, it looks pretty good. So just trying to keep my eyes open for some of these. Spotify, some of these things that have been running, this is another thing you can do. Like to me, Spotify has been for a while kind of more of a hold than a sell. I mean, it has been in top 10 here or there, but it's already been running for a year. It's up. People know about it, that sort of thing. When you have a market correction, if the stock can hold up, it kind of tells you, it's like, hey, no, I have more gas left in the tank. So if it can continue to hold up, and so far Spotify SPOT is holding up very well. Obviously, it had this huge 3-day shake from 360 to 300. I mean, it's a hell of a shake. But here we are back as I record this almost to new closing highs, okay? I'm not saying you really want to be buying breakouts in this environment, but I'm just kind of flagging the relative strength, okay? Palantir is one that you kind of have to flag. This is PLTR. Again, it had a bunch of weeks up in a row here. Actually, let's just look at the weekly chart. Bunch of weeks up in a row, and then you have your 3-week correction, including this wipeout to the low on Monday. But it started to bounce, reacted well to earnings, and not just one day on earnings, but yesterday was huge. Now I think it's almost at all-time highs here, or pretty close, or multi-year highs anyway. So Palantir certainly one, kind of in the software, still AI space, but not AI infrastructure, right? Looks very, very good. Okay, restaurants. I don't want to. There's actually a lot of names they might be in next week's top 10, so I don't want to mention them here. But Shake Shack looks good. This one had a nice, big tedious correction here, and then kind of this boom, big reaction to earnings, and then it hasn't been able to shake out that much this week, and now it's within 7 or 8% of its all-time high. You can see the shakeout here, but quick recovery. Wingstop, I'm not going to say is like. It probably, like a lot of things, needs more time, but here was the breakout last fall. Big move. Now we finally have the correction. It is living under the 50-day line, but just notice how it's actually had 3 weeks tight here. It might actually be 4 weeks tight, which is usually not the worst sign after a correction gets underway. Number one, and number two, when the market's so volatile. So actually, we are seeing some restaurants, not all, but some, show a little bit of strength here. Medicals and biotech. I mean, ARGX is one that was in top 10 recently, and what flagged it for me here was, I think it's today, if it closes higher today, this is 10 of 12 days up, and I think 11 of them are on above average volume, and here it is hitting new, like higher highs compared to where it was, a few days ago before the market kind of fell off a cliff. I mean, that's pretty strong, obviously. Eli Lilly, which I completely had taken off my list, because this is one of these examples where the stocks had a massive run, and then it had it wasn't down 50% like Dell or anything, but I was just looking at it and just like, this thing is probably toast. And maybe it is, but then it reacts well to earnings yesterday, and it's showing follow through today. I'm not saying this is like some high odds buyable pattern. It's all over the place, but clearly the snapback, it looks much more like a tennis ball than an egg splattered on the ground, as the old saying goes. Transmedics, TMDX, tried to gap. It did gap last week, but then that's when the market got weak. It sold off, but it actually held in there pretty well. New closing highs as of yesterday. So, I mean, that looks pretty strong in the medical. There's a lot of medical stocks, decent amount of software stocks. There's a lot of, some names out there. Aerospace, GE I mentioned. GE's funny because it's like, I mentioned these mid-cap names that are whipping all over the place. And then it's like, and then we have GE. But GE Aerospace, first of all, on the weekly chart, you can just see, the price volume, there's been no selling. There's been no selling in the stock for weeks, even though the stock hasn't gone anywhere. But it hasn't had a shakeout, and after a big run, sometimes you worry that there's a lot of people that might sell on strength. Well, whether it was the market or that, the stock did shake out, obviously. Here's your Monday low. And now it's just been marching higher. I wouldn't say it's been the most impressive thing, but at the end of the day, it's not far from new high ground. And the group is strong too. Carpenter, CRS. This isn't totally aerospace, but it's materials. A lot of it goes into aerospace. Obviously, big shakeout here, but right back towards its highs. Those look pretty good elsewhere. This is Granite Construction. This isn't aerospace. This is just moving on to kind of more, stuff. If you drop it on your foot, it hurts. Those sorts of companies. So GVA looks pretty good. Really, you wouldn't know that the market had sort of a mini crash here, right? It had one sort of wobble, kind of hanging in there, looks fine. Certainly looks like it wants to go higher if the environment improves, okay? And then, here we go. CYBR, this is one where it looked like it wanted to break out. It's not ready. It has a huge shakeout with the market. Reports earnings, snaps right back. So like on the weekly chart, you'll see these things that pulled back a little bit of volume, and then you have sort of over the top volume on earnings. You can see it's sort of, they call it outside weeks, but either way, it's recouping a lot of like 3 weeks of declines in like 3 or 4 days sort of thing, which is, a positive signal. It's got this nice big base. Cybersecurity, not the best group out there because it's crowd space, but certainly something to watch. And then last but not least, some of these other names, again, if they've already corrected, some of these things I've noticed, they didn't act crazy on this. If the stock was up in the stratosphere, it got whacked during this sell-off. But some of these other things, are starting to try to, round the corner. This is DoorDash, which got hit on earnings here, but it's basically been, I don't want to say bottoming out because it did hit lower lows here, but it's been kind of, not really accelerating lower. And now all of a sudden it's starting to turn up, reacted well to earnings. The first day, and then this wild day on Monday, let me clean up the chart. It gapped way down, came all the way back on huge volume. So it certainly seems like there's a lot of big investors that wanted to own the stock or build positions on, Monday's dip after earnings. Okay, so my guess is the stock wants to try to round out. There is some old overhead, but we're seeing more of these sort of names too that they topped out in February, March, April, corrected like a ServiceNow, reacting well to earnings, and we'll see how it goes from here. Okay, so with all that said, I mean, if you just look at individual stocks, it's like, hey, why not buy all these? When I look at this, I mean, I do think there is a lot of daylight here, and my guess is the NASDAQ can eat into that. And I'm all for a V pandemic crash recovery scenario with growth stocks leading the way. I'm all for that. But I have to, with experience and just a lot of the damage among the leading stocks like chips and networkers and stuff like that, my guess is, you do, this is what the odds favor, not what I'm guessing. The odds favor you do rally into here, and you maybe hack around for a while. You might have a little bit of good news or bad news or whatever. And then whether it's a retest or just some sort of, bottoming process, bottoms are a process, not an event, that's just what the odds favor. So right now, I might have a couple of like small change. I have 60% cash, so maybe it's a couple of small buys, or maybe it's a couple of big buys, but a sell of something over here. Some moving around the edges there. But in terms of like a big buying spree, and it's like it's go time, and the institutions are buying, and the stock's going to have a nice sustained advance for 2 or 3 months, like that's kind of where the big money is. My guess is that's going to take a little bit more time to set up, especially as we're in August, September. That sort of seasonal period is usually when you do get these some of these retests and bottoming processes go on. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.